Hey, good morning, everyone. Clint Thomas with RKN. Thought I'd give you a few tax tips here right before year end that could help you. Important to know, the IRS just released their new mileage rates for 2019. Next year, they're going up from 54.5 cents per mile reimbursement up to 58 cents, a 3.5 cent per mile increase. The rate for medical and moving expense reimbursement or claiming mileage would be going up a couple cents from 18 cents per mile up to 20, and then they left the charitable mileage rate at 14 cents. So just be aware of that. One thing from a tax tip standpoint is for next year, especially since the new law has taken away our ability to deduct anything in the 2% miscellaneous deduction category, including unreimbursed mileage. You might want to think about renegotiating your arrangement with your employer to, if you do some mileage or some driving for your employer, think about redesigning your comp plan to incorporate an accountable plan and get reimbursed for those miles. Just something to think about since you can't write them off personally anymore. Also be aware, this time of year it's easy to forget the December 31st deadline here just in a week and a half or so. For those of you who are old enough and have IRAs that have the RMD requirements, required minimum distributions, December 31st is an important deadline to take out those RMDs for 2018. Otherwise you can get hit with a pretty stiff penalty, a 50% penalty or excise tax on the amount that you should have withheld, and that's easy to miss. So get with your financial advisor to calculate the proper amount based on your age and your proper withholding table. There's also some things that just came out regarding Tesla vehicles. Tesla has reached the, I think it's 200,000 mark in sales for their electric or plug-in hybrid vehicles. And so there are now going to be a phase out of the $7,500 tax credit you get on Teslas over the next year or so. So between now and the end of 19, that $7,500 credit is going to be phasing down to zero. So just be aware of that if you're in the market to buy a Tesla. Isn't that great? I guess maybe I should look at one. So hope you have happy holidays, Merry Christmas, and there's so much tax planning going on this right now here at year end. One final little tip might be, when you're looking at your planning, make sure you're safe harbored for to avoid penalty. You know, you either have to pay in based on your income level, either 100% or even 110% in most cases of your 2017 tax. You have to pay that in for 18 to avoid underpayment penalty. Another safe harbor is to meet 90% of the current year projected tax liability, whatever that ends up being for 18. As long as you pay in 90% of the current year, that's also a safe harbor to avoid penalties. So we're helping our clients maybe look at year-end bonus strategy and withhold the proper amount to make sure that they've paid in enough tax to minimize their risk of penalty there. So again, just several things we're doing for our clients. We're always guiding you forward. If you have any need, give us a call at the office and we'd be glad to help. Happy holidays to everybody, Merry Christmas, and God bless.